Welcome to Thoughts on Investing, your weekly market brief. This past week was, well, it was a weird one. We had all this political drama making headlines, but at the same time, the Dow and the S&P 500 were just blasting off to record highs. So what on earth was actually going on? Let's get into it.
All right, before we dive deep, just the usual heads up. Everything we talk about here is for educational purposes. This is not financial advice. So please, always make sure you do your own research before making any investment moves.
So yeah, that's really the big question for the week, isn't it? You've got this very public, very tense back and forth between the White House and the Fed, and somehow the market doesn't just shrug it off, it actually thrives. It's pretty wild. So what was the real engine pushing everything to these new records?
Okay, so to really get our heads around this, we got to start with the week's incredibly mixed signals.
I mean, the difference between the headlines and the ticker tape was just night and day. On one side, you've got the news cycle absolutely dominated by political noise. The whole Trump versus the Fed thing, plus these new fears about a cap on credit card rates. But then you look at the market and, wow, the Dow and S&P 500 are hitting brand new records. And to make it even stranger, gold, which is where people usually run when they're scared, was also soaring. It just doesn't seem to make any sense, right?
I saw a line in a market report that just nailed the feeling perfectly. It said, it's like being excited and nervous at the same time. And that's it. That really sums up the mood on Wall Street. Everyone was kind of thrilled with the gains, but also looking over their shoulder at all the political drama.
All right, let's dig into that tension between politics and those market highs.
Okay, so there were really two big political stories creating some serious headwinds. First up, you had the constant public criticism of the Fed, which made a lot of people question its independence. And second, this surprise proposal to slap a 10% cap on credit card interest rates, well, that sent a huge shockwave through the entire banking sector. You can imagine the panic about what that would do to profits.
And all of this created this really interesting situation called contrast trading. It's exactly what it sounds like. It's when investors are feeling optimistic enough to buy stocks, but they're also just nervous enough to buy stuff like gold as a safety net. So what happens? Both the risky stuff and the safe stuff go up at the same time. It's a huge sign that nobody was willing to go all in one way or the other.
But here's the thing. While everyone was glued to the political news and the big indexes like the Dow, something else was happening, kind of under the radar. And that was the small cap surprise.
And check this out. Some small cap stocks went up by as much as 62% in just 1 week. I mean, that's not just a little bump. That is a massive vote of confidence in some of the market's underdogs. And this wasn't just one or two lucky stocks either. The whole Russell 2000 index, the one that tracks all these smaller companies, it also hit a record high. And that's a really big deal because a healthy small cap market is often seen as a sign that the overall domestic economy is in pretty good shape.
So what was going on? Well, it's something called a rotation trade. Basically, investors were cashing in some of their profits from the giant tech stocks, the ones that have been doing so well, and they were moving that money or rotating it into smaller industrial and energy companies. It's a sign that they're hunting for growth in new places, betting that these smaller guys are about to take off.
Of course, no market is an island, and all this drama in the US definitely sent some ripples across the Atlantic.
If you look at London, the FTSE 100 actually went down a bit. A stronger pound made it tougher for UK exporters, and that same uncertainty that was hitting US banks was felt over there too. But, and you're going to see a pattern here, just like in the US, that same uncertainty was great news for gold miners. Their stocks did really well.
Okay, I know that was a lot to take in. So let's wrap this up with your key takeaways for the week.
So, 3 big things to remember from this crazy week. First, political influence is a huge deal now. What the president says, the tension with the Fed, these are real market movers. Second, that small cap confidence we saw, that suggests there's a real optimism about the economy that's broader than just a few big tech companies. And finally, global interconnection. It's so clear that what happens in DC has an immediate ripple effect in places like London.
And that really leaves us with one big question to think about. When you see a market sending so many mixed messages, you've got risky stocks and safe haven assets both going up. Big companies are kind of stuck while small companies are flying. It really makes you wonder, in a market full of contradictions like this, where do you think the real opportunity is?
And that's our look at the week. If you enjoyed this breakdown, hey, do us a favor and hit that like button and subscribe to the channel. It really helps us out. Thanks for tuning in.